Yo traders, welcome back to Hope Pips, your home for unlocking the secrets to Forex success. I'm fired up to bring you a deep dive into the rally-based drop setup, a killer strategy to catch bearish reversals and trade with the big players like banks and hedge funds. Today we're shaking things up with a case study approach, following a trader named Alex as he masters the RBD to stack pips. Whether you're new to Forex or a seasoned pro, this video will teach you how to spot, trade, and profit from the RBD like a boss. We'll break it down with real-world examples, practical tips, and challenges to get you thinking like a smart money trader. If you're new to Hope Pips, hit that subscribe button, give us a thumbs up, and join our crew of traders chasing financial freedom. Ready to dive into the RBD and bear the markets? Let's roll after the intro. Hi everyone, I hope everyone is fine. Welcome to our channel. If this is the first time you come to our channel, please watch our previous videos, then you will understand this topic well. I will leave those videos and playlist links in cards. Okay, without wasting our time, let's get into the topic. Here is the topic. The chapter 1, Alex's journey with the RBD setup. Let's start with a story about Alex, a Hope Pip subscriber who was struggling with Forex losses. One day, he stumbled across the rally-based drop setup, and it transformed his trading. The RBD is a price action pattern that signals a potential reversal from a bullish trend to a bearish one. It's like a red flag from the market saying the bulls are losing steam and the bears are taking over at Hope Pips. We love the RBD because it lets us align with institutional sellers and avoid getting trapped with retail buyers. So what's the RBD? Picture this, the market rallies, pauses, and then crashes. It's a three-act play. Rally, the price surges upward driven by buying pressure, maybe from a news event or retail traders piling in. The second one is the base. The price stalls, forming a tight consolidation zone. This is the supply zone, where institutions start building sell orders, absorbing buy orders from retail traders. The third one is the drop. The price plummets, breaking below the base as sellers overwhelm buyers, confirming the supply zone and signaling a bearish shift. Alex learned that the RBD works because it reveals institutional footprints. During the base, banks and hedge funds quietly place sell orders, setting up for a big move down. When the drop hits, it's their sell orders kicking in, creating a supply-demand imbalance that tanks prices. Let's follow Alex's journey to see how he cracked the RBD code. Case study. Alex's first RBD. Alex is analyzing USD on a 1-hour chart. He spots a 60-pip rally after a positive Eurozone PMI report. The price then consolidates for this between 1.1920 to 1.1920, forming a base. Suddenly, it crashes 80 pips, breaking below the base. That consolidation is Alex's supply zone, a hotspot where institutions are selling. Why does the price return to this zone later? Because the drop exhausts sellers, and the market seeks new buyers to balance the imbalance, letting institutions defend their sell positions or add more orders. Challenge for you. Open a demo chart on any pair like USD/JPY. Can you spot a rally, a tight base, and a sharp drop? Pause the video and try it. At Hope Pips, we're all about hands-on learning, so let's keep going with Alex to learn how to spot the RBD like a pro. Let's move to the next chapter. The second chapter, spotting the RBD like a market detective. Now let's channel Alex's detective skills to spot the rally-based drop setup. The RBD is like a bearish warning sign, but you need to know where to look. Since the market is fractal, it appears on any time frame, 30-minute, 4-hour, or daily. Let's break it down through Alex's eyes as he hunts for RBDs. Alex's chart analysis. Alex on GPUSDs for our chart. He sees a 100 pip rally after a UK retails report, followed by a base of few candles at 1.380 to 1.3820. Then a 120 pip drop confirms the supply zone. Here's how Alex identifies the RBD rally. Look for a strong upward move with green candles. The bigger the rally, the stronger the signal. A 50 pip surge in a few candles shows heavy buying that's about to reverse. Base nothing but a supply zone. Find the consolidation after the rally, a cluster of small candles with low volatility. Alex marks the zone using zone approach, a rectangle from the base's highest high to lowest low. This is broader but easier to spot. Another one is key candle approach, the last bullish candle in the base where the next candle closes below its low. This is a bearish confirmation candle, ideal for precise entries. Micro pattern approach, wicks or inside bars in the base, hiding lower time frame supply zones, a 15-minute chart within a 4-hour base. The final stage is the drop. Confirm the bearish breakout below the base with strong red candles or a gap down, showing institutions triggering sell orders. Validation clues. First one is drop strength. A sharp drop like 50 plus pips in a few candles signals heavy institutional selling. The second one is the base duration. A short base, very few candles indicates a big supply-demand imbalance, making the zone stronger. The final one is freshness. Supply zones are strongest on their first retest, with unfilled institutional orders. Alex's aha moment. On AUDUSD's 15-minute chart, Alex spots a 40 pip rally, a 10-candle base at 0.7500.7520, and a 60 pip drop. On a 1-hour chart, the base looks like a bearish order block, a single candle before the drop. This multi-timeframe view boosts his confidence. Challenge for you. Pull up a chart on UBP or USD CAD. Find a rally, base, and drop. Mark the supply zone and share your findings in the comments. At Hope Pips, we want you to master this setup, so let's follow Alex to see how he trades it. Let's move to the next chapter. The third chapter, Trading the RBD with Alex's Strategy. Let's join Alex as he turns his RBD setup into profits. Trading the RBD is about entering when the price revisits the supply zone after the drop, aligning with institutional sellers. Here's Alex's strategy for nailing RBD trades packed with practical steps. Case study: Alex's RBD trade. Spots an RBD on USD JPY's 1-hour chart. A 70 pip rally, a base at 110.54 to 110.70, and an 80 pip drop. He waits for the price to retest the supply zone, and here's how he executes. Alex's trading plan. First, mark the supply zone. Alex uses the key candle approach, highlighting the last bullish candle in the base. Alternatively, he could use the zone approach for a broader range. Wait for the retest. After the drop, the price often returns to the supply zone as selling momentum slows and the market seeks buyers. Alex waits for USD JPY to hit 110.60. Confirm the setup. Alex looks for candles like exhausted candle, a candle with a long upper wick rejecting the supply zone. Bearish breakout candle, a red candle breaks the previous green candle. And also look into the lower time frame breakout, a 15-minute chart showing a break below the zone's low. The final step is execute the trade, entry. Alex goes short at 110.65 after a bearish exhausted candle closes. Or he enters on a break below the zone's low. Most important is the stop loss, placed 5 to 10 pips above the supply zone's high. The last but not least is the take profit. Targets the next demand zone or a 1 to 3:1 reward to risk ratio. Position size, risks 1% of his $10,000 account, $100 on a 10 pip stop loss, using a 1.0 lot size. Manage the trade. Alex trails his stop loss to break even after a 15 pip gain. He watches for demand zones below to take partial profits if the price stalls. Alex's result. The price to 110.35, banking 30 pips, a 3-1 win. I have a challenge for you. Set up a demo trade on an RBD. Share your entry, stop loss, and take profit in the comments. At Hope Pips, we are about action, so let's keep going. Let's see the fourth chapter. Avoiding RBD traps with Alex's lessons. Alex learned the hard way that RBDs can burn you if you're not careful. Let's explore the biggest traps and how he avoids them to trade like a Hope Pips pro. Trap 1. Entering too early. Alex once shorted during the base, thinking it was the supply zone. The price rallied higher, stopping him out. Solution. Wait for the drop to confirm the supply zone. Trap 2. Ignoring the big picture. An RBD on a 15-minute chart failed because a daily demand zone below supported buyers. Solution. Check higher time frames like 4-hour, daily for conflicting zones. Trap 3. Risking too much. Over-leveraging cost Alex big losses early on. Solution. Risk 1 to 2% per trade. Use the key candle approach for tighter stops. Trap 4. RBD. A sluggish drop or long base more candles signals low institutional interest. Solution. Focus on RBDs with sharp drops, short bases few candles, and fresh zones. 5. No confirmation. Alex got faked out by entering without signals. Solution. Wait for exhausted breakout candle or lower time frame breakout plus volume by confirmation. Challenge. Review a losing trade in your demo account. Was it one of these traps? Share in the comments. The final chapter. Alex's Pro RBD tips. Alex's RBD trade with these pro tips. Multi-time frame power. Confirm RBDs on lower time frames, but check 4-hour daily charts for major zones. Volume clues. A volume spike during the drop or retest confirms institutional selling. Liquidity traps RBDs after false breakouts above high stop hunts are extra reliable. Challenge. Apply one tip to a demo RBD trade and share your results. That's it, traders. You followed Alex's journey to master the rally based drop setup. Start practicing on a demo account to trade like a Hope Pips pro. Subscribe and hit the bell icon for our next setup video. Like and share this video and drop your RBD trades or questions in the comments. I read them all. Check Fastpull's tools, link below. Trade smart and keep stacking those pips with Hope Pips.